Welcome back. It's time to focus on EPL. Company reported a good performance in Q1 with healthy growth in revenue and profit, and operating margins also expanded. Management says they will sustain double-digit growth in FY25 with 20% plus margins. To talk more on that and the outlook going forward, we are now joined by Anand Kripalu, MD and Global CEO at EPL. Mr. Kripalu, good afternoon. Thank you for joining in. The street seems to like the fact that you're sticking to your guidance, 20% plus margins, double-digit growth. I wanted to understand if this is achievable in FY25 itself, because you're right now at 18% margins. Will it be led by any particular geography or any product mix changes that you'll do? What is making you so confident of achieving this number?
Well, good afternoon, and thank you for having me on this program. Yes, we're actually very pleased with last quarter's numbers in terms of growth, margin, as well as PAT. And our absolute EBITDA growth also was really, really solid. Just a point, our margin last quarter was 19.1%. And the guidance that we've given is that our plan is to have sustainable double-digit growth with 20 plus margin. Now, we haven't very specifically said exactly when that will happen, but that is exactly the plan that we are working to. And we are absolutely confident that we will be able to consistently improve our margins as we look ahead towards that goal of 20%. So whether it will happen next quarter or by the end of this fiscal, I don't want to commit. But that is absolutely our guidance. And we have consistently been making progress towards the guidance that we've given.
Okay. You sound extremely positive in terms of the margins, but just wanted to understand, in terms of Egypt as a segment, that's been seeing some amount of currency devaluation. There's some headwinds in terms of demand. What does it mean as a segment for you all in terms of a geography and as well as the margins within that space?
So Egypt is actually a relatively small part of the business. Last year, we had to take an exceptional provision because of currency devaluation. The advantage now is that the currency is more free-floating, and therefore there is going to be no surprise in terms of currency loss. And what we're doing is trying to sweep whatever currency we have locally there and move it out of the country as fast as possible. Having said that, I just want to say that our demand and momentum in Egypt is really bouncing back, despite the fact that it's sitting at the foothills of a very troubled zone in the Middle East. Despite that, our domestic demand in terms of this volume and revenue remains very, very solid.
Okay. So, the EAP geography this time around has done well with margins of around 22%. You've seen reasonable revenue growth as well. Will this be the margin number going forward in this segment as well? What is the product profile here that margins are better? And will this lead to the growth that you're talking about in margins going forward?
So actually, as far as the overall margins for the company are concerned, I think the delta is going to come more from Europe and the Americas, okay? And that's what we've seen even in the last quarter. Now, EAP, to your point specifically, is already in the zone of margins that we're trying to operate in. And our performance in EAP is, while the large part of the business is still oral care, the contribution to growth has been very significantly coming from beauty and cosmetics. That's been innovation-led. A large part of that is to do with what we call local kings. So, local brands that actually are doing very well in China and really test our capabilities in terms of innovation. But also importantly, as we innovate, we also get a margin uptick because it's more premium, and therefore we have better margins with those kinds of offers. So I think our ability to sustain EAP at these levels of margins, but drive growth more importantly, through accelerated beauty and cosmetics performance is really what we are aiming to do.
Okay. All right. That sounds interesting. But the other segment that, the other geography which you've seen some amount of traction from is Brazil. You've seen some amount of customer acquisitions there. You've seen some 2 new MNCs come on board. Give us a sense in terms of these kind of markets where you spoke about the personal care segment seeing a lot of growth. But Brazil as a segment, what are you, where is the growth coming from? How much is it growing? What are you anticipating?
So first of all, we're very excited about our greenfield entry into Brazil. We've been producing on the ground in Brazil for almost a year now, and we took less than a year to set up a plant in what is a very complicated country to do business in. So we're very pleased with how we've executed that project. Our anchor customer and the anchor volumes for Brazil were predominantly in the oral care segment. But what's happened is the moment we set up shop on the ground, we have actually been very pleasantly surprised with the kinds of inquiries we've had from other multinational companies beyond our anchor customer, as well as a lot of local companies. So the way we are looking at it is that, of course, this year Brazil will contribute to growth because it's not there so much in the base. But we're excited about the fact that we will continue to expand our customer base and continue to expand our business well beyond oral into hair care and other beauty and cosmetics brand, both multinational and local. So while Brazil is still relatively small to our total business, and it's becoming a meaningful contributor to our Americas region, we believe in terms of contribution to growth, it will sustain certainly for the next couple of years.
Okay, so just to follow up on that, Brazil's utilization levels were at 65 to 70%, the last known number. What does it increase to, the new plant? And the second part is the sustainable tubes. What is it as a percentage of revenues right now? In Q4, it was at 21%. Are the margins here higher for you?
Yeah, so as far as Brazil is concerned, our utilization is about 70-odd%. And I think the good thing is the civil that we've created in terms of just the structure of the factory, as well as utilities and so on, we have invested in for much more volumes in the future. So it's a modular factory. As more demand comes in, it'll take us 6 to 9 months to put in a new line and start producing more tubes. Okay, so we can operate in a very agile way there. And the moment we hit a circuit breaker of 80-85% utilization, I think we will go and start expanding. To your point on sustainability, we are actually very focused, but also very excited about our journey on sustainability. Sustainability for us is not just the tube, it's about being the most sustainable packaging company in the world. And that's why we were awarded EcoVadis Gold last year, and we're well on our journey to get to Platinum by next year, which will put us in the top 1% of companies worldwide. Now, this quarter, 29% of our tubes were fully recyclable, right? So sustainable, up from the average of 21% in FY24. So what we are seeing is now an accelerated demand from our customers, and our objective is to stay one step ahead as far as our ability to supply sustainable tubes is concerned. To a last point on margins of sustainable tubes, you always have a choice when there is a discontinuity in the marketplace. You have a choice to say, am I going to use this as a driver of growth and an opportunity to grow my share of the total tube market? Or will I be opportunistic and charge more for it? We are doing the former and not the latter. And we have actually seen in the last quarter good improvement in our wallet share, because we are more ready than others to supply sustainable tubes. So we are seeing good increase in wallet share, particularly in oral care.
All right, that point is taken, and congratulations on your sustainability efforts as well. Completely run out of time. Thanks very much for joining in and speaking with us. So that's EPL. Stock has done well, up 23% this year. We'll take a break and be back with more. Stay tuned.